Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. Today is Monday, July 15th, 2024. In today's episode, I'll start with noting that the VIX seems like it is ready to blow up. I've been saying, and I'll continue repeating, the longer the VIX stays this low, the worrieder I get. Gareth Soloway, also on his show, had been noting today this wedge. Well, you guys can't see that. How do I do this? This wedge pattern, basically a bit of a breakout, and he says a lot of money is prepared to pile into this, and so yeah, his whole thing is wait for a confirmation, basically a close above today's wick at the top there, and that can confirm a larger breakout. Like I've been saying, we've been coiling up here for a while, and it was due for a breakout. Looks like that might be starting now. I'll repeat, like I said before, the market seems to be pretending to leave, like pretend safety, and I consider pretend safety to be like the mega caps, Nvidia, Microsoft, just because there's too much speculation priced into them right now. One piece of bad news can send the stock going down 10%. That's not a healthy market. That's not an appropriate way to price a security, especially a company that big. And people are going into higher risk. They think they're going into higher risk, even though it's probably actually lower risk. And I'm talking about the small caps and how they have been just on an absolute tear lately. Just today, we went up another 2%. Well, before like consolidating for a while, and so this is a rotation of sorts, but I don't consider it to be a very smart one. Third thing on the agenda, big crack in HYT, otherwise known as junk bonds. As you can see here, we haven't seen a lot of movement in this market for a while, and finally today, it had looked like it was breaking to the upside, and I had been calling out how I just think that this is really ridiculous here. Junk bonds somehow increasing in value, while credit spreads are tightening, while the yield curve is crazily inverted, while the Fed is still tightening, while all the economic data is saying that things are slowing down. And so today we finally, for me, this is a relief that like things are actually starting to make sense a little bit here, with junk bonds getting a little bit of a crack today. Last little note, just daily reminder, 2-year, 10-year yield is on its, sorry I didn't write it there, past its second birthday. Alright, I do not believe this has ever happened before in history, and if it still is a reliable indicator, it's saying that we might be headed into the first depression for 100 years. We haven't seen a depression in 100 years, and I'm going to remind people too, before the Great Depression, depressions were a lot more common. They seem to happen all the time. If you look before the Great Depression, there are many, many depressions, sometimes seeming like one right after the other. It's like everyone's expecting Jay Powell, the government, to just turn the money printer right back on, as soon as things start getting a little rough. And if the conditions are right or wrong, or inflation is surpassing what the rates can handle for as far as going down. I'm thinking next cycle actually with this. I don't think we're going to be as accepting of inflation as a lot of other people think. Part of it is the fact that, like, the dollar being the global reserve currency, I think the powers that be do not want de-dollarization in the world. That's just me and my crystal ball. Last thing on my sheet, just wanted to note next week we don't have really any data coming out this week, but next week, Thursday and Friday, we have GDP second quarter coming out, and Friday we have PCE, the Fed's favorite indicator of inflation. Now to get through the rest of the charts. If you're in greed, we are, in my strong opinion, very dumbly in greed mode. Again, we'll see how this plays out in the short term. I wanted to note that, speaking of dumb money, if you consider stocks to be dumb money and bonds to be smart money, well, the dumber money in the stock market, you could argue is still growthy stuff, because you can't really, Graham even says, I'm reading about this in The Intelligent Investor right now, that, there's not really a real appropriate way to price growthy stuff, because you don't know how much money it can make over the next 30 years, and it has to do with the rate of growth. It's kind of like if you're driving a ship across the sea and you're off by 1 degree, you end up 1,000 miles away, further down the road, and so the pricing can be really all over the place. And so, it's largely dumb money that's in charge of very growthy stuff, especially like a lot of ARK stuff. Now, granted, a lot of ARK holdings are not so dumb growthy. Zoom comes to mind as being, in my mind, not so overvalued, just because of their balance sheet position more than anything. But for the most part, I still consider ARK in general to be dumber money, and when it's getting excited, I get more fearful, and I think that's appropriate. Part of the reason ARK is, getting a bid here is, Bitcoin. If you're following any markets, I'm sure you noticed, went from, about 60,000 recently all the way down to 53,000, and we're all the way up to 64,000 already again. So this market has been getting very exciting lately, getting to new lows haven't seen since March, and then popping up here. I noticed on Gareth Soloway's show, he thinks that if tomorrow closes above some level on here, he's expecting it to go back up to 72,000. By the way, it seems to me we could head straight there tomorrow, but I'm not touching that one at this moment. I'm more interested in Bitcoin when Bitcoin is very obviously, to me, cheap, and I need to see it crash and be like, oh yeah, well, now that it's clearly down, this isn't clearly down enough for me, so I'm not that interested at this point. Wanted to bring up the 30-year Treasury yield. If you've been following the show, you know I'm still highly exposed to this. I have about 50% of my entire portfolio, basically my whole net worth, in basically Treasury bonds, 0Z, TLT, TMF, these kinds of funds. And I just wanted to point out, we're really kind of coiling between the most recent trend lines that we have here are, let me get rid of the other one so it's more clear. So this one here and this one here, and so I'll be very interested to see if yields are able to break down out of this wedge, or if they'll break above it, so that's what I'm keeping my eye on in that market. I wanted to bring up SMH, very clear little bear flag here. See if I can draw. I can't draw, I'll just point. So big pull, consolidating a little bit here. This looks very bearish to me. Same in the Qs, big red engulfing candle of 4 days, and then sort of flagging out here a little bit. So yeah, I might be nibbling on some UVXY calls tomorrow for a very short term, maybe get some of the explosion up. I think we might be there at this point. Just a little tiny nibble, just to get a little taste of it. I can handle it, and might be able to benefit handsomely from it. at the very least, I'm glad that markets are finally getting a little bit interesting here. They've been getting kind of boring this summer, to be honest, and yeah, starting today, so this week could turn into a very interesting week. And that's all I have for you today. Hope you enjoyed. Thank you for watching. Robschild.